Ladies and gentlemen, good day and welcome to the Vasa Dencity Limited earnings conference call to discuss the operational and financial performance for first half of financial year 2024-25. From the management team, we have with us Dr. Vikas Agarwal, Managing Director, Mr. Sandeep Agarwal, Whole-Time Director, Mr. Gaurav Agarwal, Chief Financial Officer, and Mr. Sunil Gupta, Consultant Accounts. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this call is being recorded. I now hand the conference over to Dr. Vikas Agarwal, Managing Director, Vasa Dencity Limited. Thank you, and over to you, Dr. Agarwal.
Ladies and gentlemen, good morning. I extend a warm welcome to Vasa Dencity Limited's earnings conference call for the half year of the financial year 2024-25, which ended on 30th September 2024. I appreciate all of you for taking the time to join us today. We have uploaded our financial results update for the half year of the financial year 24-25 and a presentation on the website of NSE, and the same is also available on our company website. I trust you all must have seen and reviewed the same. I would like to brief you all about the industry, the company, and some key developments before getting into the financials and business performance of the company, which will be taken care by Gaurav, our CFO. India's dental care sector is undergoing a transformative growth, fueled by increasing awareness of oral health, rising disposable incomes, and the surge in multi-speciality hospitals providing comprehensive dental services. The Indian market for custom-made crowns and bridges alone is expected to expand from $0.8 billion today to $3.1 billion in 2030, reflecting an annual growth rate of over 13%. Additionally, the clear aligner market is projected to grow from $133 million today to $569 million in 2030 at an impressive 23% CAGR. At Vasa, our commitment to transforming the dental supply industry in India is stronger than ever. Over the past year, we have made some strategic moves to enhance our reach, expand our capabilities, and provide unmatched service to dental professionals across the country. So the first thing which we have been doing is the warehousing and the infrastructure expansion. Recognizing the importance of efficient logistics, we have significantly grown our warehousing capacity, now totaling 43,900 square feet. This expansion with new locations in key markets like Mumbai, Nagpur, Kolkata, and Guwahati have cut our average delivery time to only 4.5 days now. Faster delivery times and optimized inventory management enhances our ability to meet growing demand swiftly and reliably. Second point is the digital transformation and customer engagement. To elevate the customer experience, we launched an upgraded version of our platform in the end of September, dentalguard.com, which incorporates advanced features for a smoother, more responsive user journey. The improvements are evident over the monthly active users, which have risen 48% to 335,000. So there's a discussion on this, which we will take up in the question and answer session, where we will justify the monthly active users count over the past quarters and years. So this growth signals high customer engagement with a 76% returning rate of customers on the website and app, highlighting trust in our platform. Product portfolio expansion with dental lab solutions. In response to the market needs, we ventured into dental lab manufacturing through Smileworks Private Limited, offering custom-made crowns, bridges, and different types of prostheses. This vertical integration allows us to serve our customers more comprehensively, expanding our role as a one-stop solution for dental practices and laboratories alike. Enhance quality control and customer loyalty. With a stringent focus on quality assurance, we achieved a low 1.9% product return rate, reflecting our commitment to reliability. Our extensive product selection, now comprising over 20,000 plus unique products, have helped drive a 23% increase in the customer base. Additionally, our target outreach efforts have strengthened brand presence and customer loyalty within the dental community. These initiatives align with our core values of operational excellence and customer centricity, setting the stage for continued growth in India's dynamic dental market. By strategically investing in our logistics, digital infrastructure, product range, quality standards, we are well positioned to capitalize on future opportunities and reinforce our leadership in the industry. We are optimistic about the journey that lies ahead, and our commitment to advancing oral healthcare in India is steadfast. Our dedication to innovation, quality, and accessibility forms the cornerstone of our mission. We also have our sights set on venturing into untapped markets within the dental industry. In conclusion, I would like to thank our shareholders for their continued support and confidence in Vasa. I also extend my gratitude to our employees for their hard work and dedication. Together, we have achieved decent success this year, and I am confident that we will continue to build on this momentum in the years to come. Now, I would like to hand over the call to Mr. Gaurav Agarwal, to take us through our operational performance for this year.
Thank you, Vikalji. Good morning, everyone. I am Gaurav Agarwal, Chief Financial Officer of the company, hereby giving you a brief update on our operational performance. Vasa Dencity Limited reported robust financial performance for the first half of financial year 24-25, reflecting strong year-on-year growth across key financial metrics. Our total revenue for the first half of financial year 25 has reached rupees 113.14 crores, making a 46.8% increase from rupees 77.07 crores in the first half of the corresponding previous financial year. This growth underscores our expanding market presence and increased demand for our extensive product offerings. Our EBITDA and profitability for the first half of financial year 25 stood at rupees 12.3 crores, reflecting a 51.29% growth over rupees 8.13 crores recorded in the first half of the corresponding previous financial year. Our EBITDA margins has improved slightly, rising to 10.87% in the first half of financial year 25 from 10.55% in the corresponding first half of the previous financial year. This increase in profitability reflects effective cost management and operational efficiency, along with enhanced scales in our operations. Our profit after taxes for the first half of financial year 25 is rupees 8.77 crores, up by 39.65% from rupees 6.28 crores in the previous financial year. This growth in our bottom line earnings reflect our continuous focus on optimizing cost and maximizing returns. Our earning per share for the first half of financial year 25 has increased to rupees 5.48 compared to 4.19 in the first half of the corresponding previous financial year, reflecting a 30.78% year-on-year growth and demonstrating the value we continue to deliver to our stakeholders. On operational metrics, the total number of orders grew to 2.61 lakhs in the first half of the financial year 25, a 29% increase compared to 2.02 lakhs orders in the first half of the corresponding previous financial year. This growth reflects an expanding customer base and high retention rates due to our improved service capabilities. Our average order value saw a year-on-year increase, underscoring the increased demand for higher value dental products and comprehensive solutions. Our monthly active users count of our platform increased by 48% to 3.35 lakh users, indicating strong user engagement and satisfaction with our upgrade digital platform and improved customer experience. Our customer loyalty and satisfaction has underscored by a remarkable 76% customer return rate. Additionally, our strict quality assurance measures resulting in a low product return rate of just 1.9%, further demonstrating our commitment to quality and reliability. These results showcase the effectiveness of our strategic initiatives from warehouse and digital platform investments in our expanded product range. Our steady financial performance not only reinforces our leadership in India's dental market, but also highlights our potential for sustainable growth. Now, I would like to hand over the call to Dr. Vikas Agarwal for further updates.
Thanks, Gaurav. Now I would like to open the floor for any questions you may have. And we are also open to any questions on our email ID, cs@dentalcard.com anytime. Thanks a lot for your kind attention. Moderator, you may please open the floor for any of our shareholders for asking questions.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask questions may please press star and one on your touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and one to ask questions. The first question is from the line of Jayant from PKT Advisors LLP. Please go ahead.
Hi, am I audible?
Yes, you're
Yes,
audible.
Jayant.
Okay. Good morning, Dr. Vikas. Firstly, congratulations on a really good set of numbers. I had a few questions for you. The first one is regarding our inventory. I wanted to understand the underlying reason why the inventory days have been rising, and where do you see this trend going forward for the second half and the years to come?
Yes, Jayanji. Jayanji, inventory days have risen, and we are very serious about the inventories increment in our different warehouses. But to achieve a lower, delivery timelines of below 4.5 and to satisfy the customers, we had to increase inventory in our regional warehouses. And we are very serious about it, and in the long term, we think that this should be the peak of the inventory days.
Got it. Thank you, Dr. Vikas. Second question was regarding our net profit margin. So if you look at it year on year, it has slightly decreased. Not that it's a big sign of concern, but I wanted to understand, is there any specific reason why it has gone down from 8.15%?
Actually, Jayanji, the thing is that we have been investing on a lot of things in last 1 year. If you can see the investment on the talent, the people, has increased by 50%. So once, it starts reflecting on our top lines, I think the bottom lines will follow. So a lot of expenses have been done, for which this is a very short time to justify that why the bottom line is not increased. In future, once, we have developed the whole infrastructure, the whole ecosystem. So with time, we think the revenues will start coming, and these bottom lines will become healthier.
Okay, doctor. Thank you so much. I'll get in the queue again. Good luck for the future.
Thanks a lot, Jayanji.
Thank you. The next question is from the line of Dinesh from Finsight. Please go ahead.
Hello, sir. Can you hear me?
Yes, sir.
Yeah. So thank you for giving me this opportunity and a really great set of numbers. Sir, quite a few questions from my end. First of all, as in the previous question, you mentioned that we would like to see an optimized warehousing, and the infrastructure is in place. How long that will take, based on your current growth and expectations? Like, what's the timeline for that?
So currently, we are also trying to optimize it as soon as possible, and we are also learning with it. So a definite timeline is difficult to give, but we will try to achieve it as soon as possible. The orientation of the team and the management is that we want to do it as fast as possible.
Okay, sir. Can you just explain it in detail, a few points at least? Like, what is there still needs to be done, by point by point? Like, I would like to see what it will bring the improvements, whether it will bring improvements in just the delivery timelines or better customer acquisition and lower, product retrieval kind of a thing, so returns. So where else you would like to see these improvements? Can you just elaborate on that?
There are certain values which we want to provide our customers. One of that is a faster delivery. So in the long term, these set of values will define how much the customer is satisfied with us. So over the past 8 years of our journey, we have seen a lot of customers exit, and on surveys of those exit customers, we found out that the delay in delivery or the delivery timelines was a major concern. So when we open a warehouse in a certain region, we have to put multiple SKUs in that warehouse so that the allocation can be done for majority of the orders done. So, for example, there are 20,000 plus products with us in our mother warehouse in Gurgaon. So when we open a warehouse in Bangalore, we don't keep all the SKUs there. We have to slowly increase the inventory in those warehouses. And once once a threshold number of SKUs are present in the Bangalore warehouse, the allocation will be higher, because doctor is not ordering one item in an order, they are ordering multiple combination of items. There can be items in the order which are not present in the Bangalore warehouse. In that case, we have to split the order, some part from the Bangalore or some part from the Delhi, or we have to send the whole parcel from Delhi itself. So that diminishes the experience of the customer which they have with us. So on these all dynamic factors, we continue increasing the inventory in regional warehouses, and we see an increase in the allocation of orders. With the allocation of orders done faster, the user experiences improve, and we are seeing that directly in our data patterns. So that is the learning curve. So we are learning how much, like what products to keep and how much allocation becomes higher. So the data provides a certain guidance in that, and then there's a hit and try.
Okay, sir. Really great on that. Just last final points. Like you mentioned, we currently have some around 20,000 odd products. So how many products are actually needed for us to run this operation smoothly? Like are there 50,000 products or 100,000 products? Like what is that maximum we can have in the industry?
Yes, sir. Currently, what we understand, I think we have to increase the number of products to around 35,000. That is the catalog size of our inspiration, Henry Schein, which is a US-based company. That is our current understanding. As time progresses, we will continuously understand, what all products can be there.
Okay, sir. Great. And you had mentioned that we would reach somewhere around, long-term target of 800 crores or revenue or something like that, last few calls. Are we still there? What kind of margins you would look, EBITDA margins at least we are looking at in the long term?
But it is difficult to comment on the EBITDA margins and profit when we reach 1,000 crores. But we are 100% inclined to reach there and even beyond that. And everybody in our team is highly motivated to do that in the long term.
Okay, sir. Thank you very much and all the very best. I'll get back with you.
Thank you. We'll take the next question from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, am I audible, sir?
Yes, sir.
Yes, Deepak.
Yeah. Thank you very much for this opportunity. So just wanted to understand our, first of all, the own brand mix. So what was our own brand mix currently in this quarter?
Sir, it is around 50%.
Around 50%. And how it has been trending and how do you see that in next 2 years?
Sir, over the last 3-4 years, I have seen the own brand mix to increase and the same reflected in our profits. Mm-hmm. But it has been stable for last 3 quarters because we have to maintain the neutrality of the platform along with increasing the own brand mix. So as soon and as much own brand products we can launch, we are doing that. But overall, the sale of the other brands is also increasing. So the brand mix is currently stable around 50%. In the long term, we aspire to increase this, maintaining the neutrality of the platform.
Aspire to increase, I mean, over next 3 years, what, 65-70%?
So the long-term target is to be around 70%.
70%. In 3 years, I mean, would that be a fair timeline?
That will be a fair timeline, sir. Sir, one thing more in this, that the brands which we sell exclusively in the India market will also be included in the own brand mix.
Yeah. Your exclusive partners are also included in this 70%
Correct.
or 50%. So, but in general,
Currently, the brand mix is more of our own private labels, but in the long term, we are looking for exclusive brand partners in India. The multinational companies who sell only through us in the country, through our platform. So if we include that, it is likely to be achieved in next 3-4 years.
Okay. And what is the differential between your gross margin in your private label versus exclusive partners?
Almost the same.
Okay, almost the same. I mean, even the private labels and exclusive partners, our gross margin is same, right?
Yes.
Okay, understood. And I mean, this year we were on the growth part. I think this year we were targeting 70% revenue growth, right? That's we have said in the previous calls. And now in the first half we have grown by about 46% odd. So how do we see this target? We are still holding on to this target?
So we are trying to do that. Actually, there was a mistake from my end that I gave the internal team targets publicly. So I now think that, I should say less and do more in future.
Correct.
So we aspire to do definitely a number which I said in the past. In finding ways, a lot of things have to fall at the right place to achieve this in the next 6 months.
Correct. But what is the reasonable range that one should look at realistically? I mean, because to achieve 70%, you need to grow by about 90% in the second half, right? It might be difficult. I mean, so what is the reasonable range that one should look at in terms of growth for this year?
I think the reasonable growth we should look at is similar to what we did in the first half.
Okay. So about 45-50% may be a reasonable range, I mean, that one may look at, right?
Yes, sir, possible.
Okay. And your EBITDA margin, I think, saw an improvement in this quarter, right? As compared to, so is this EBITDA margin sustainable going forward? 11%, I think we have seen. And what led to this improvement?
So the less promotions, like there were heavy promotions done in the first quarter this year. In the second quarter, we did not do so much promotions, so the discounts and rewards were given less. That led to this increase. And in the long term, we are in a hit and trial mode, that we try different things to get more customers acquired, and then in the long term retain them with different strategies. So we are not sure that this how high this will be, or what will be the effect. But we will also explore this in next 2-3 years. What can be done with the EBITDA margins?
Correct. But we should be in this range. I mean, is that something that we can at least say that? I mean, in terms of 11% that we have clocked this quarter.
Possibly yes, but still I must say that we will be exploring this.
We will still be exploring in terms of, okay. And have you started this buy now and pay later facility on our website that we were supposed to writing? And so
Buy now pay later has been started, but we are in final talks with a large NBFC for financing our channel partners as well as the customers who buy large value equipment. So BNPL finances around 25,000 to 50,000.
Okay.
And the larger NBFCs can do it up to 10 lakh rupees.
Okay.
So we are on it, and if that is done, that it will give us a boost.
Correct. But has the revenue started from this, buy now, pay later?
BNPL, yes. Yes,
so
already
what is
started.
the revenue mix right now from this? Because ideally people would want, if that is a facility available, want to avail that facility, right, on your website?
Yes. So I have to check the exact numbers for that. Don't have it in hand, but the percentage is relatively small currently.
Currently small. But will it impact your EBITDA margin in the medium term if it becomes like 40-50% of your revenue makes 30-40%, 50%?
I don't think BNPL will be 40 to 50% of our mix because it is for smaller value items generally. Once we have our NBFC on board, which can finance our channel partners as well as our large customers. For example, somebody wants to set up a dental clinic, and the average dental clinic costs around 10 to 12 lakh rupees. For that, the BNPL won't work.
Correct.
And if we can tap that whole new clinic setup thing with our financing partner, then we'll get that number which you are talking about.
Okay, understand. And then there will be marginal impact can be there, right? Because then you'll have to pay some spread to the NBFC as a charge, right, for providing this facility.
Yeah, we have to pay that, but it will bring in lot of new customers who we are associated from the beginning, and then their regular consumable purchase or a clinic upgradation purchase might follow the same.
Fair enough.
So it's a good business to enter according to us.
Absolutely. I think that's very helpful, Vikasji. I think thank you so much and wish you all the very best.
Thanks, Deepak.
Yeah.
Thank you. We'll take the next question from the line of Manan Pamani from Mission State. Please go ahead.
Yeah. Thank you for the opportunity. So a couple of things. In the past, we have talked about exclusive distributorship of one of the product. And so how has that progressed? I think Baldes, that was the announcement that was done. So is that contribution significant in H1?
Mananji, the contribution of Baldes in H1 was not significant. And there are a lot of work which happened in the background for which the results are still to come. For example, making a key opinion leader network, making training modules for the whole staff, hiring people in that, doing workshops across the country, sponsoring different pediatric dentistry conferences. That work is happening. But overall, seeing our revenue, the contribution by Baldes is not significant.
Okay. And so it will probably take still about a year or so, if I understand correctly. I mean, I'm just trying to understand the opportunity size that you have mentioned over here is quite large. So I'm trying to understand that when will we probably see good contribution from this partnership?
Mananji, we are trying our best to get results out of it. So maybe in the next H1 earnings call, I'll give more brief on that. I'll be prepared for that. Currently, we are trying our best to get traction for that, and we are the most significant player in the market for that currently. It is about time that we start seeing some numbers in it.
Right. Okay. Thanks for that, sir. And so secondly, on the customer profile, how are efforts to increase share in tier 1 cities going along, and are we seeing improved traction in the tier 1 cities as compared to the past?
Yes, for increasing traction in tier 1 cities, we are coming up with service centers in all the 8 tier 1 cities of India. And we have started with finalizing one center as of now in Bombay. Rest centers will follow, and timeline is difficult to predict on this because everything takes a lot of effort to open a service center. So one thing for which we have seen a concern from the tier 1 dentist is that it takes longer time to get things repaired or get a servicing done. So we want to have a small team in a service center in different cities where a doctor can come to get a product repaired immediately. Secondly, there'll be a team of 2-3 people, depending on the area, to go to a clinic and do servicing of large value equipments. So this will give boost to our small equipments and large equipment sales both. This is what we expect.
Right. Okay. And lastly, if you can just give a brief on how are we thinking of this SmileWorks lab, dental lab opportunity. And I mean, I'm just trying to understand, are we setting up labs ourselves or is it just manufacturing that we are doing? So if you can just brief on this new line of business. Thank you.
At this time, with SmileWorks, Mananji, we are setting up a corporate laboratory, which will supply to dentists in Delhi NCR. And once we understand that, how we can scale this pan-India, we will start with that operations. Along with the laboratory thing, we are also building a tech stack where a doctor can directly order a prosthesis and then can track the whole event, like all the different milestones it goes before coming back to the doctor. That tech stack is something which is not there in the country currently, which we want to tap on.
Right. And lastly, for the full year FY25 or FY26, is there any capex guidance that you would like to give?
Sorry, I don't want to give any capex guidance.
Okay. Yeah, thank you so much and best of luck, sir. Thanks a lot.
Thanks a lot, Mananji.
Thank you. The next question is from the line of Pavan Kumar, an individual investor. Please go ahead.
Hi, Vikasji. Thank you for the opportunity and congratulations for the good set of numbers. Am I audible?
Yes, Pavan.
You're audible.
Okay, thank you. I have a couple of small queries. One is, are you able to share some revenue guidance for FY26? FY25, I can understand we are not there. We are where we were expecting yet. But maybe we'll reach somewhere better in the second half. That's fine. So FY26, do you have any numbers if you want to give?
Sir, I think the basic 30% growth should happen.
Over FY25.
Although we aspire to do much higher than that, but for answering your question, I think the 30% basic growth is definite.
Definite, okay. There was a discussion in earlier calls that we are planning to reach 500 crore revenue in next 3 years. I heard that in H2 FY24. So are we do you want to revise any guidance on that, or do you see that by FY27 we will reach 500 crore, or plus minus if you want to say something?
I don't want to revise that guidance. We are 100% inclined internally to achieve even beyond that. We are making all efforts. We are building the team. We are trying to satisfy our customers' needs. We are increasing the product portfolio. So overall, we are building the whole ecosystem, and it is the time which will tell that how much traction we will get out of these efforts. Currently, the efforts which we have done in last 1 year have not shown in our numbers, but in future we expect the same.
Okay. So FY27 is the 500 CR. That is correct.
I don't want to say any definite numbers or guidance on the same.
No, I mean, 5-10% plus minus, we understand all that. No problem.
That is possible.
FY27 we were targeting earlier, right? FY27, or that's correct understanding, right?
Yes, Pavanji. Pavanji, at the same time, I want to tell you the different strategies we are doing, the kind of talent we are acquiring, the focus of company on the customer delight and the relationship building. This is what matters to us. The numbers should follow all these efforts.
Yeah, I understand. Thank you, Vikaji. Vikaji, do you have an update on like warehouse? Earlier I heard that we are going to open some warehouse in Assam, Kolkata, and Indore. Have we opened those ones or not?
We already have a warehouse in Guwahati. We already have a warehouse in Kolkata.
Mm-hmm. And Indore?
These were already done.
Okay.
पवन जी आपकी आवाज क्लियर नहीं है, एक बार रिपीट करिए.
Hello. Yeah, and how about Indore also? Was that also in picture? Indore warehouse.
Indore is not yet open, so that is still we are exploring. So there are two things going on. Firstly, the already open warehouses need to be optimized to a certain level before we open further warehouses. So Indore is being explored because there is an area which can be served through it, but not yet done.
Yeah. Okay, there is this new SmileWorks Dental Lab. I was going through the PPT. So how much revenue potential do you see from this particular new subsidiary or new initiative in next, let's say, 2-3 years? Any rough idea?
Sir, it is difficult to predict that, but at the same time, the potential and the market size is huge. And why we started with SmileWorks is that last year we served around 90,000 customers, and all of them are dentists. The same dentist is taking services of laboratories, and we thought, why not we supply our customers with more products, that is custom-made prosthesis through a lab. So we already have the customer. We have to build the product and supply to the same set of customers. That will give us certain percentage of the total market size. And if you see the market potential, it is going to be around $3 billion in 2030. Only the dental lab crown market. So it's a huge opportunity for us. We are at our toes working hard to build something out of it along with the tech stack.
Okay, great. Thank you for the insights. Just one last from my end. Are you looking for any acquisition or anything for this year or next year?
Yes, sir.
Okay.
We do.
Thank you.
We do. There are opportunities in the market which we keep an eye upon. So as soon as we
evaluating something right now?
No, as soon as there is any deal, we will release it in the market.
Okay. Thank you, Vikaji. That's all from my end, and all the best for the future.
Thanks a lot, Pavanji.
Thank you. The next question is from the line of Videsh Sangwan, an individual investor. Please go ahead.
Hi, thanks for the opportunity. I just have one question regarding the SmileWorks lab. So is this a fresh start from scratch, or are we partnering with some other player who has prior experience in this? And yeah, I mean, just on this and the location, like, is it 100% subsidiary or just dynamics of it? If you can explain, please.
Yes. So there was a lab running in Delhi for last 8 years, which was doing a top line of around 5 crores with a very healthy bottom line. So we acquired that lab and merged that into SmileWorks and started SmileWorks with all the expertise which Dr. Ankur Gupta and Mr. Lalit Sharma had with that lab. So they are now 40% partners in the lab and 60% is with Vasa.
Okay. Yeah, that's it. Thank you.
Thank you. The next follow-up question is from the line of Dinesh from Finsight. Please go ahead.
Hello, sir. Thanks for giving me another opportunity. My question is, sir, I see our marketing expenses are around 1.6%, something like that, less than 2%. And I presume that's part of our other expenses, which have almost doubled, over the last HY. Any reason like why are we, being such a high growth industry, and why the market expenses are so low? Is it possible to, increase the expenses to derive higher revenue growth?
Yes, sir. We are looking at it, and in future, we will be increasing our marketing budgets to acquire new customers.
Yeah. So that's the reason. Like, why do we kept it so low? Like, as we were not sure of the market potential there, like, because generally, say, high growth companies will have at least 4-5% at least something, or up to 10% of the marketing expenses, right? So, any reason that we kept it so low for now? If you could,
Yes. Yeah. Dinesh, actually, till now, we were only doing digital marketing. And now we have started offline marketing, being present in all the doctor conferences, being there in smallest workshops of the country. So now we have started spending offline as well, and combined together, and there is some room to invest more in the digital marketing as well. So in future, we have a plan, a strategy to increase our marketing budgets, which can go up to 2.5 to 2.7%. And we understand that increasing the market in this high growth potential market, increasing the marketing budget in this high growth market is might be giving us results.
Okay, sir, that's great. Sir, you had in previous calls you had mentioned that we are tapping dental colleges as well, to get into the new students, and so where are we on that plan? Like, have we contacted the colleges there? Like, what's happening on that front?
So we have made a team which is institutional, dedicated institutional team, and they are going to different colleges, getting orders, but it will take some time to get heavy orders or overall orders of the colleges.
Okay, sounds great, sir. I think I'm done here, and thank you very much, sir, for another opportunity. And
thank you,
all the very best. Yeah.
Thank you. The next question is from the line of Pranay from Advait. Please go ahead.
Yes, good morning, Dr. Vikas. Thank you for the opportunity to ask a question, and congratulations on a great set of numbers. It's very heartening to see the amount of hard work that has been put up by the team in creating the digital platform and creating the strong set of private label brands on top of that layer. So congratulations on that. I just have two questions. One is, given that a lot of dentists in the major tier 1 cities already have existing relationships with their vendors and distributors, which is sticky and difficult to enter that space, is there any thought process on offering our private labels, not just on our dental card platform, but also with some other large distributors in Delhi, Bombay, Bangalore, and Calcutta?
Yes. Hi, Pranay. Thanks for your question. So last year after the IPO, we started our offline operations, and one of our prominent brand called Balding, we opened for the offline as well. We started making dealers. Currently, we have more than 100 channel partners and more than 60 people on ground for sales. So, for getting higher share of the tier 1 market, we are doing these efforts to put our products on the racks of dealers, large distributors of different areas around the country, and serving the doctors from there.
Okay. Thank you for that.
Just to add to my answer, in the next 10 years, this online market will grow to around 40% of the total industry. But the rest will still remain, the rest 60% will still remain offline. We understand that, and we are building our strategies and our team, our tech stack accordingly. So a hybrid model will be the future, where anything and everything dental can be supplied either online or offline.
Right. Well, thank you for that, Dr. Vikas. It's very reassuring and encouraging to hear that online will reach 40% because we are clearly the market leaders in the online dental space with all our competitors few and far between from what Dental Cart has achieved. So that's a great reassurance. My last question was just in terms of our existing portfolio of private labels, whether that's Walden, Super Endo or Endo King. Is the ongoing philosophy to expand the product portfolio within these established brands, or is the philosophy to launch more brands and add to the list of private labels?
So it's a mix thing. There'll be product additions in these marquee brands as well as new brands as soon as we find a different segment. So Super Endo is a dedicated endodontics brand. So anything in a particular price range within the endodontic sector will be part of Super Endo. Endo King is a lower end endodontics brand. Similarly, U-Ortho is a lower end orthodontic products brand. Category wise as well as the pricing wise, we have segmented our different brands over the years. And we think that this is the right strategy working for us. In future, we will continue to do so. If we, get to learn anything new, we are flexible to move towards that also.
Okay. Thank you, Dr. Vikas. Just lastly, if you could walk us through any time during the conversation about the improved app, the newly updated version of the app, and how we hope to benefit our end customers with engagement, with retention, and to make sure that we've addressed a lot of the previous issues regarding delivery timelines and address issues or the app not working as clearly or on the user interface. Anything that you could share in terms of the newly updated app, but that you can do anytime during the call, not necessarily right now. Thank you so much.
Banerjee, we can take it now also. Sandeep is there with us. Sandeep, you can take this question.
So, can you reiterate the question, sir, please?
Yes. So, Sandeep sir, I just want to understand if you could explain a little bit about the newly launched version of our app and how we aim to improve engagement with dentists, retention, and to make sure that we don't lose any dentists who are entering our app.
Okay. So there are like two parts of it. So currently we have launched a website only, a newly launched website. So what we have done is there are many customer behavior flows in the old website. For example, if a customer is landing on a certain page, he used to click the number of clicks that he used to take is higher in comparison to the current website. The second part is that whatever data we are getting from the system, we check many videos, and with the help of design team, we used to change the look and feel of the website as well, because that itself creates a lot of values to the customers. And the third part is that if you see our website, there's a lot of content on the product page and the listing page. So that content is not visible earlier. So we are trying to have the clear communication with the customer so that they can take better decisions very fast. So this is the purpose of having the new website. And soon our app will be live soon. Our app will also be live soon by the end of this month or first week of next month. And the overall aim of the all the changes that we are doing is to increase the conversion rate as well, because most of the sales that we are getting is from the online channel.
Okay. Thank you so much, sir. Congratulations.
One more thing I want to add here is that we are also building a lot of customized modules. So our vision is to empower our customers, the dental professionals, beyond boundaries. So to do anything like giving them empowerment, we'll be building modules in future. One of the marquee modules we are building currently is the events platform. So any dentist, for example, a dentist is in a very small town and he only do 5-6 procedures, general procedures like extraction or a root canal or maybe frenectomy. So in future, if he wants to learn more procedures, they have to continue dental education, which is called a CDE program. We will be giving them access to book events to learn any procedure around the country, maybe the nearest place. If a dentist is in Yeminagur in Andhra Pradesh, he wants to travel to Hyderabad for a small 2 days workshop, he can do that. Currently, there is no one-stop place for booking dental courses or events in the country. They find it out through social media or through their friends, and then they call a certain number and book it. We are giving a direct platform like Book My Show for all the dental professionals of the country to book events. So this is one such example. There are many modules which are in the process of building. Somewhere in some modules the BRD is going on. In some module the UI UX is under design. In some the tech development is the backend development is in progress. So we are building around 8 different modules currently to empower the dental professionals.
Right.
And overall security and equivalent performance is also one of the major things that we used to keep on doing. So the new website is much secure than the previous website, and even the performance is much better.
All right. And sir, lastly, our last mile vendors like DTDC, FedEx, and Blue Dart, can you tell us a little bit about our negotiations with them? Are we zeroing in on just a few vendors, or do we want to use a large number of vendors, and have the commercials been worked out to be more favorable for us, or anything? Because I imagine the last mile delivery cost and servicing and the service quality is important for the end customer. So any color you can throw towards that?
So currently we have tab with almost all the logistic couriers, major logistic couriers in the country like Blue Dart, Delivery, Expressbees, Bits, CPRE, DTDC, and like you name any courier, we will have integration with them. Already we have integration with them. So we continue to do check from our own system that like which courier is performing good in which particular pin code. So there are multiple factors. So cost is one of the factors. The second part is the performance. And if a courier is taking lesser time in comparison to other couriers, we may pay higher for that. Second is the cost comparison part. So we used to get monthly negotiations with all the couriers, and we continue to check a comparison sheet with every courier partner, how much they are paying, how much they are taking for a particular multiple zones like A, B, C, D, and for different warehouses as well. So overall, the cost is negotiation is really good, and we are very optimized in terms of that.
That too, along with the different weight class.
Right. And all of these vendors are able to provide us, help us with the cash on delivery mechanism, or for cash on delivery you have to change the vendor?
No. Every logistic partners that we are onboarding, they are giving us cash on delivery services. Prepaid services to hota hai, already they do that thing. And secondly, they also give the reverse pickup services as well. So whatever pin codes they are giving us, these 3 services are included in that.
Okay, wonderful. Thank you so much. Thank you for your time.
Thank you.
Thank
Thank you, sir. We'll have the next follow-up question from the line of Jayant from PKD Advisors LLP. Please go ahead.
Hello. Yeah, thank you for giving me another opportunity. Dr. Vikas, this is just a follow-up question on the inventory question which I had asked you. Where do you see this inventory days stabilizing in the long term, going forward in the next few years or the quarters?
Sir, I think this should be the peak of the inventory. As I said earlier, I have a direct eye on the inventory levels at different warehouses at the SKU level, and I can on my CRM I can see directly what inventories are there, how they are reducing, how they are being used up. So the biggest challenge for inventory is for the products which are being imported at a certain MFP level. So if I want to do an exclusive tie-up with a company, for the whole country, I have to buy certain MOQs, and the same sales should also follow. So sometimes when you start a relationship, initially it takes time to build. Once the numbers start coming, that will become stabilized. So just to answer your question, I think this should be the peak of the inventory, and we have a keen eye on the inventory levels.
So moving forward, you basically see this plateauing or going down. Makes sense.
It should.
Okay. Thank you. Thank you so much.
We also are doing quant reco, that the journey of a single SKU across different warehouses to the customer, that journey also is being tracked well. It depends on the top line, how the numbers grow, how much the sales can grow, the inventory levels will come down automatically.
Okay. Thank you so much.
Thank you. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Dr. Vikas Agarwal for closing comments. Over to you, sir.
Thanks a lot to the moderator. Thank you all for taking the time, your precious time, to join this call and asking all those wonderful questions. This makes us understand the kind of investors we have with us, who check everything with keen eyes and always suggest us with their ideas. I want to extend my heartfelt appreciation to each member of the Dental Card team, the Vasa Dencity team, our valued customers as well, the banks, the financial institutions, and all the other shareholders. If you have any further questions or need additional information, please do not hesitate to contact our investor relations team on cs@dentalcard.com. Thank you again for your time and participation. Moderator, you may please close the call.
Thank you very much, sir. Thank you, members of the management. On behalf of Vasa Dencity Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.